quickly get on board with our technical expert of the show. We have with us Ajit Mishra of Religare Broking. Ajit, good morning. So good to have you back. Ajit, yesterday finally some green, which was visible. Can we expect certain gains to further build on because Nifty is back above its 20 DMA?
Yeah, good morning, Lavisha. So yes, the tussle is on. Means if you see that the last week and the first trading session of this week, both this tussle is around the January month low, 22,800 mark. So on the closing basis, bulls are trying to defend this area, and at the same time, the key sectors, basically banking, to be precise, is giving this helping hand. So as of now, we see this as a respite, but for a reversal, we need sustenance above this 23 to 50 mark, which coincides with the 20 days of exponential moving average. Then only we can say that yes, we can see sustained recovery towards 23,600 mark or maybe higher. So as of now, it's just a respite, considering that banking is outperforming. Then we have other sectors also which are witnessing recovery or a rebound due to the oversold position. So as of now, indications are mixed. But yes, comparatively, if we say that benchmarks are better placed in comparison to the broader indices, means mid cap and small cap, there's still a possibility that we might continue to see further correction, even if we see a rebound in benchmark indices. So the focus should be more on the sectors which are outperforming or stocks which are outperforming within those sectors, like banking. Then we have certain stocks from the IT basket also which are holding strong.
Okay, all right. You mentioned that the financials have, held the pillar for the markets for the time being. Any levels that you're watching out for? Bank Nifty index, 49 to 50, we are above at.
Right. So 48,500 is something that is acting as an immediate support, but upside around 49,600, which was earlier acting as a support, that might act as a resistance. So around that area, we may again see some bit of a profit taking. But considering the tone of select private banking majors like HDFC, ICICI, Kotak, there is a possibility that we might even surpass that hurdle and inch toward 50,000 plus area as well.
Okay, okay. Ajit, what about the pharma stocks? Yesterday, Nifty Pharma Index that stood well in this volatile market. So, do you expect the index poised for a good run going ahead?
So pharma is comparatively stronger. There's no doubt about it. But if you
Yeah.
see the last 4 5 days of move, you'll find that there's no sign of decisiveness here. Also, means one day you are seeing that some of these pharma majors are doing well, other day they just surrender all the gains. So as of now, within the pharma basket, again one needs to be selective. So Divis Lab, Biocon, Sun Pharma, structures which are basically outperforming within the pharma basket is something that one should be focusing on.
Okay, okay. What about the Nifty FMCG? Because after the budget, the index, 11 straight days of decline we have been seeing for the FMCG index. We did expect some budget boost coming in, and that would actually trickle the index also higher. But now it's been complete 11 days of loss. What are you eyeing out there on the FMCG index?
Yes, so in fact, Lavisha, despite oversold position, we are not seeing any respite. Means on every rebound or a recovery, we are seeing selling pressure emerging, and it's like if we'll exclude a couple of names like stock like Britannia and Marico, which are holding strongly the ground. Majority of the stocks are trading in sync with the index. So still, I would recommend to avoid any fresh long or adding to your loss-making position in the FMCG basket until we see some sign of decisive reversal.
Okay, okay. Since you're saying that plenty of undecisiveness is there in the market, any sector particularly are you eyeing out for? Because even auto index is not holding well, pharma index is not holding well. Apart from financials, any other sector that you believe could hold well in this market?
So IT and banking, obviously, these two is something that holds the key in case market have to make any decisive move. It's not just that they hold maximum weight in the index. If you see all the other sectors, they are down and out, extremely oversold, and we are seeing selective recovery or rebound, be it realty, auto, pharma. Uh, But banking and IT, they are comparatively better if you compare it with the index also, the kind of decline or the correction that we have seen. So large cap IT names is something that one should be focusing on alongside with select mid cap IT names like Coforge, Persistent, and then the banking and financial stocks.
Okay, okay. What about railway stocks, Ajit? We also have a query coming in whether or not it is a good time to enter some of the railway stocks like Aircon, RVNL, or should we expect certain more corrections expected? We were eyeing out for the budget to give some allocation to the railway sector, but there was nothing as such. So, what are you expecting? How do these counters look like at this point of time?
Right. So despite the correction, Ravisha, we are not seeing any sign of reversal in most of these names. So, like what I've shared about mid cap and small cap names, and that holds true for the other themes also, which were in fancy earlier. So avoid just with every passing day, we are seeing a newer lows in most of these stocks. So adding to your loss making position is not a good idea in anticipation of any rebound. So put your money where actually the strength is. So I'm not seeing any sign of rebound or recovery in any of these names as of now.
Okay, okay. All right, let's take some stocks in focus. We had SBI Cards, the company which has declared an interim dividend of about 2.5 rupees per share, and I have shared a record date for the dividend eligibility on February 25. The board has also approved the appointment of Salila Pandey as the company's managing director and CEO, which is effective from April 1st onwards for a 2-year term. Ajit, if you look at SBI Cards, the stock has done fairly well in the past 1 month. Even we saw Macquarie coming out with its report, upgrading the counter. So, what do you expect? How does the trend look like in the near term for this stock?
Yes, so in fact, Lavisha, it's been almost like a prolonged corrective tone, corrective trend that the stock experienced before this recent rebound. Almost nearly 3 years of corrective trend that the stock witnessed, and then we are finally seeing some, uh, you know, uh, sustained buying in the stock. So indications are in the favor that yes, we can see around 920, 930 area in the near future, and with base now at 800, 810 zone. So the risk reward is favorable if somebody is looking for a positional view, let's say for a week or two. Definitely, you can start accumulating at current levels with 810 as a stop loss and 920 as a target zone.
Okay, all right. Now let's move on to how the markets have opened. Well, we're seeing some respite today also, but of course, flat in the green at this point of time. 22,950 above is Nifty 50 at this point of time. Sensex is also opened flat in the green at this point, but still above that 76,000. So we're seeing a bit of rates flip here and there. It's still in the range bound territory, and right now it's again back in the red, but we'll watch out how this development unfolds. If you look at the broader end of the markets, mid caps showing some signs of resilience. Again, 0.1% gains coming in for the Nifty mid cap index. Small caps, on the other hand, also showing a little bit of resilience, of course, but once again, it is in the flat in the green territory. India Wix continues to remain elevated above that 16 odd levels. And Nifty Auto Index, once again, sixth day of decline we saw for the Nifty Auto Index. Today also it's going to be seventh day because it is coming in with about 0.3% cut for the Nifty Auto Index. On the other hand, banking index has opened in the green, flat in the green at this point of time. On the other hand, if we see PSU banks, that have opened in the red. 0.3% cut coming in for the Nifty PSU banks. Nifty IT index, as we were talking about, that has also opened well, and 0.4% gain coming in for the Nifty IT index. Nifty metals, however, what is not performing is your Nifty metal index. Then your consumer durables are not doing well at this point of time, and as I mentioned about Nifty PSU banks. On the other hand, if we look at some of the top gainers on the Nifty, we can see Bharti Airtel definitely after the block deal, the stock has been performing well, coming in with about 1% gain for Bharti Airtel. Apart from that, we can see Tech Mahindra also doing well, Apollo Hospital, Axis Bank, all of them featuring in the top Nifty 50 lists. On the other hand, if you look at some of the top losers on the Nifty, they include the likes of Tata Steel seeing a more than 0.5% cut coming in. NTPC, most of the metal names are dominating the counter. NTPC seeing about 0.5% cut. JSW Steel again 0.5% cut. If we look at some of the oil and gas, ONGC, 0.5% cut coming in for there also, and Titan and Tata Motors, Tata Group companies, seeing a cut of nearly 0.5% too. But let's see another stock in focus of how GMR Airports is doing at this point of time. We can see, nearly a percent gain coming in for the stock. Well, the company did post about 11% uptick in its passenger traffic for January, and aircraft movements also rose by 9% year on year. We can see that the domestic passenger traffic was up about 11% year on year, and even the international passenger traffic rose in the month of January. Ajit, if you look at GMR Airports as a stock, the stock has been quite negative for the past 6 months. Do you believe these numbers could bring out some reversal in the charts?
So, Lavisha, if you see that it's almost a month now that the stock is experiencing some consolidation, means around 68 to 76 is broadly the range that the stock has been hovering in. And currently, we are trading closer to the lower band of the same. We are seeing some sign of divergence also within the price chart on the oscillators. So that might result in further consolidation in the near future. So downside seems capped, but upside also we have multiple hurdles to cross. So if somebody is looking for any momentum, we need to wait and see whether the stock manages to cross this 74, 75 area decisively. Then only you should look for long trades. And those who are holding existing longs, 65 should be your stop loss, and around 74 75 you have to review your position.
Well, the first query coming in from Naveen is asking the view on Ashok Leyland. Ashok Leyland, Ajit, how does the stock look like on the charts? Because the company did post a good set of Q3 numbers, net profit up by 32%, and even margins were so for eighth straight quarter they have given up a good operational performance too.
True, and that is what reflecting in the outperformance of the stock also, while the majority of the auto counters are either witnessing profit taking or a sideways tone. We feel that this rebound may extend further. 228 is the immediate hurdle for this stock if the view is very short term, so that should be your target zone. But once we break that area, there will be a possibility that the stock might gradually inch towards its record highs as well. So as of now, definitely you should stay put with 215 as a stop loss, and around 228 you should trail your stop loss to 2222 and wait for 240.45 as a positional targets.
Okay, 245 is a positional target for Ashok Leyland. And we have another viewer query from Naveen itself. He's asking the view on JSW Energy. JSW Energy, past 1 month, the stock has not been performing well, and even Q3 was not very promising. 27% year-on-year decrease in Q3 profit. How does the stock look like on the charts, Ajit?
So almost we have corrected nearly 50% from the record highs in JSW Steel. Stock look extremely oversold. We have multiple supports around this 400, 410 zone. So all these factors are indicating a possibility of consolidation after this recent decline. So if you have any existing position, you can maintain with that as 410 as a closing stop loss, and it might take time, for some consolidation and then possibly a recovery. But eventually, we are expecting that stock might inch toward 465 to 480 area. So as of now, one should avoid any aggressive longs, but yes, you can start accumulating with 410 as a closing stop loss.
Right, avoiding aggressive longs on the stock. Let's move to another viewer query. We have Satya who's asking the view of M&M. He has made a fresh entry yesterday at 28.20, and he's asking whether or not it is should he switch to some other auto ancillary names, which is your Uno Minda, or add both at this point of time from a 1 year perspective. M&M, quite a significant decline we saw yesterday, Ajit. How does the stock look like on the charts? Because he did make a fresh entry yesterday.
That's true, but overall, if you see, Lavisha, the stock has been outperforming on the longer time frame within the auto basket. It's hardly down roughly around 400 points from its record highs in comparison to what we are seeing in Bajaj Auto, Hero MotoCorp, and the other major names. So I feel that this dip is a buying opportunity. In fact, so if you wish to add, definitely you can go ahead with that. From the trading point of view, 2700 should be a closing stop loss because that's the band basically the stock has been hovering in. Means 2700 to 3200 for almost like 6 8 months now. So we are closer to the lower band, so it's a buying opportunity with 3000 as an immediate target and then eventually towards 3200 mark.
Okay, all right. Let's move to another viewer query. That is your Shweta Naidu is asking the view on Varun Beverages. She's bought it at 560 rupees and she's asking whether she should average or hold for another 6 months view. Varun Beverages, it did post a very decent Q3 results, Ajit, and the stock is at 479, which is nearly below what she has bought at. So what should she do at this point of time? The stock is doing well today, but overall the trend is quite negative from a 1 month perspective.
That's true, and in fact, if you'll see Nanda, Lavisha, that it's almost like 4 5 years after this kind of a prolonged outperformance, stock is experiencing this negativity. Means the stock is down roughly around 25% in this quarter so far, and we are still experiencing decline. So as of now, one should not hurry up to add to your position and wait on the sidelines to see where the stock settles. As of now, we are trading closer to the major averages, but considering that we are still seeing selling pressure on every rise, it might drift towards 445 before making any serious attempt of recovery. So as of now, it's a hold, but do not add to your loss-making position, especially if the view is less than a year.
Okay, all right. Let's move to another viewer query. That is your Pankaj is asking whether to guide on REC and PFC. REC, PFC, both the counters not doing well from 3 months perspective. How do you expect the power plays to perform in the near term?
So if you see, in fact, the entire energy basket, despite the oversold position, we are not seeing any sign of rebound. Means there were multiple attempts in the recent part in both RFC and PFC, but it failed to surpass its first hurdle, which is the 20 days of exponential moving average. So for REC, it is placed around 410. So until we break that mark, I doubt that we can see any meaningful recovery. And downside also, since the stock is already oversold, but still 360 65 could be the zone there where the stock might test next. So as of now, for REC, definitely it's an avoid. And if we see PFC, it's also almost a similar texture with the 350 being the next key support. And for any sign of reversal, we need to hold or cross this first line of resistance, which is around 395, the 20 days of exponential moving average.
Okay, 395 we need to cross for PFC. But let's move to the next viewer query. That is your Nitin Shaji is asking about Aeroflex, and he's currently holding the stock at about 20% loss. Aeroflex, recently they also approved about 400 rupees fundraise via its QIP. The stock did see a little bit of breakout in January, Feb, but again the gains once again fizzled out. How does the stock look like on the charts, Ajit, for the near term?
The near term, I feel that we are closer to the immediate bottom. Means though the stock is very volatile, if you'll see the price performance in the last 4 5 months, means from 174 to 270, and then again close to on 190 mark. So it's extremely volatile, and if you are looking for any short-term trades, I would recommend to avoid such counters because it becomes very difficult to maintain stop losses. But at the same time, those who are holding longs, 174 should be your stop loss. Gradually, it can inch toward 210 to 220 area. So around that area, you should consider reducing your position or exiting it completely.
Okay, all right. Let's move to the next viewer query. That is your Satvika is asking the view on Acme Solar. Acme Solar, how does the stock look like on the charts, Ajit? Because the company did post a good set of Q3 numbers. Profit up about 155% year on year, and even revenues have also risen by about 5% on an annual basis. But how does the stock look like on the charts?
Abhishek, the price are actually reflecting a different picture altogether because now we are trading closer to the 52 weeks low in the stock. So maybe the anticipated numbers were different. And, despite the oversold position, we are not seeing any meaningful recovery as of now. But since we are closer to the 52-week low, it might consolidate and witness or make an attempt of a rebound towards 195 to 200 in the near future. So yes, you can stay put with 170 as a stop loss, and in case of recovery around 195 to 200, you should try and reduce your position.
Okay, all right. Let's move to the next. As we were talking about financials, Ajit, we have a viewer query from Satvika is asking about Bank of Baroda and how does the stock look like on the charts? Because past 1 month, the PSU stock is not doing well. What can we expect for the near term?
So yes, if you'll see most of the PSU banking counters, they are underperforming the private banking names. So I feel that we are closer to the immediate support zones, in terms of the PSU counters. Because yesterday also we were seeing some buying interest emerging in SBI and some of the other PSU names. But for Bank of Baroda specifically, 190.95 is basically the zone where we have multiple supports on a longer time frame. So that might act as a breather or stoppage for this current decline. But as of now, there is no sign of recovery. So I would not recommend adding to your loss making position. In case if somebody is planning any trade in banking and financials, select NBFCs like Bajaj Twins. Then we have HDFC, Kotak, ICICI. These are some of the names which one should prefer.
Okay, all right. Let's move to the next viewer query. That is, your Ashish is asking the view on NTPC. The stock has seen a decent correction, Ajit. What do you think on the valuations perspective? Does the stock look attractive for the near term?
Yes, so this again, if you'll see the entire space, you'll see one thing which is common, that the pace of decline has reduced now in most of the energy related counters, but the tone is still negative. So it's just that we may see some consolidation after this sharp decline from the record highs from 440 areas to 298 now. So downside seems capped, but again, it's very difficult to pinpoint the reversal point. So as of now, there's two ways to trade this stock. One is to wait and see whether it manages to cross the first hurdle around 312 and then enter, or accumulate on dips around 280 area, 290 zone, and maintain a stop loss at 270. So these are the two ways where one can accumulate or wait for a reversal sign confirmation to enter fresh.
Okay, all right. That is the view coming in for NTPC. But let's take one stock in focus. That is your ABB India, because the stock has been reacting quite well to its Q3 results. 3.5% gain coming in for the stock. The company saw profit up about 56% year on year, and even the revenue was up about 22% year on year. But for the past 6 months, the stock has been underperformer. Ajit, how does the stock look like on the charts? Do we expect a reversal holding out in the horizon?
Yes, so the good part is that we are seeing ABB finding support, means there were multiple retests around 200 mark, and then today we are seeing a gap up start, which is holding well as of now. Volumes are strong, so there is a possibility that we might see a rebound trade, means which can help the stock to inch toward 5680, 5700 mark. So with 5200 as a stop loss, the risk to reward is 1 is to 1.5. So if you're okay with that, you can definitely go ahead with the long position.
Okay, all right. Let's move to another viewer query. That is, your Satya is asking the view on Uno Minda. Uno Minda, how does the stock look like on the charts, Ajit? Decent Q3 results, but the stock has been an underperformer when it comes from a 1 month perspective.
That's true, but overall, if you'll see that it's comparatively better to what we are seeing across, the ancillary space, and 1150, 1200 to 800 is broadly the range that the stock has been hovering in. So we are closer to the lower band of this range. The stock is experiencing from almost 7-8 months now. So possibility of a rebound is high, but since we are seeing overall negative sentiments, uh, accumulation is something that one should continue with. So means in the range of 900 to 800, one can look to accumulate the stock and maintain a stop loss at 750. Because in case if it fails to hold that area, then probably we can see deeper correction towards 650 area also.
Okay, all right. Just one last question before we let you go, Ajit. What are your top bets in this volatile situation? Any buying opportunities that you're eyeing out for?
Certainly. So, Lavisha, as we've discussed at the beginning itself, that we still have certain pockets within the banking and financial space which are holding, not only holding strong, but inching higher with every passing day. So, Bajaj Finance is one counter that after experiencing almost 3 years of consolidation, the stock has reclaimed its record highs, and on every dip, we are seeing buying interest emerging. So one can definitely look to buy Bajaj Finance or accumulate at the current levels with 8100 as a stop loss and 8800 as a positional target. And then we have, a consistent name in the telecom basket, Bharti Airtel. Though we have seen a marginal dip of late, but still it's holding over short-term averages decisively. So that clearly shows that once we have a confirmation or a sign of reversal in the index, the outperformance is likely to continue. So Bharti Airtel also can be bought at current level with 1640 as a stop loss and 1750 as a target zone.
Okay, all right. Two picks, Bajaj Finserv and Bharti Airtel coming in. But thank you so much, Ajit. Thank you so much for your time and answering our viewer queries so patiently. Hope to connect with you soon.
Thank you.
All right, let's take a quick check of the markets at this point. What the stocks were in focus. Until then, signing off.